Welcome back to Traders Corner, Summit's exclusive weekly trading show that tells it like it is. As always, I'm joined by Garth McKenzie, who is founder and editor of Traders Corner. Garth, welcome.
Hi, Julieta.
Garth, markets are quite skittish at the moment. They're never easy to trade, but I imagine they're especially difficult right now.
Yeah, they are especially difficult at the moment. We've got a lot of external risks at the moment, and markets are grappling with slowing global economic growth, slowing growth in China. We've got the European debt crisis once again rearing its ugly head. Spanish bond yields have been pushing up. So there's a lot of risk out there at the moment and a lot of concern in the markets, and it does make for a very, very skittish environment at the moment. Yeah.
And what are volumes like? I mean, with the European summer, well, in parts of Europe in full swing, certainly weather-wise, has that affected volumes, and does that also have an impact on the kind of volatility we're seeing right now?
Yeah, volumes have been very light over the last couple of weeks. We've seen some of the quietest weeks of the year on the market. So volumes have been very, very thin. And I think it's not just a function of the Northern Hemisphere summer. I think it's also a function of the fact that there's so much uncertainty at the moment, that there is not a lot of conviction to take bets in this market at the moment. And as a result, you're seeing volumes low because of that.
So that's sort of the context in which we find ourselves. Let's start off with last week's trade, which was Imperial. How did that work out for you, given yesterday's rather dramatic sell-off?
Yeah, it didn't work in the end, unfortunately. We got stopped out of this trade, which is a great disappointment. But I'll go through it and show the viewers what we did. And unfortunately, as I say, we did end up losing a bit of money on this one. But if you have a look, the chart of it is up on the screen at the moment. What I'd identified was that we had this major overhead resistance level, which went all the way back to 2006, which was at 175 Rand. And Imperial had punched out through that resistance level, and then it begun to consolidate in a nice controlled fashion. And what we had there was we had that breakout, the pullback to retest the breakout level, which is at 175 Rand. We had an uptrend there, sort of a 6-week upward trend, which the stock was testing. And then we also had a nice controlled bull flag formation. Now, these bull flag patterns are generally they're continuation patterns within a trend, and they usually break out in the direction of the trend. And they've got about a 65% accuracy rate within an upward trend,
which is pretty good for a trader.
And that's it. It's a very good, it's a very reliable formation to try and trade. So what I did was I bought for our portfolio, I bought 1,400 CFDs at a price of 178 Rand. In the expectation that the stock was going to punch out through the top of that bull flag pattern. And it actually did. It did punch out through the top of the bull flag. It was looking fantastic. We were making good money on the trade. And then all of a sudden, yesterday, we had that nasty sell-off in the market, as indicated there on by that circle that I've put on the chart now. And unfortunately, that triggered our stop loss at 173 Rand, which ended up meaning that I lost 8,500 Rand on this trade. So it was a great disappointment, especially given that it initially started looking so good, and it was working, and I was almost certain that it was going to go up and hit our target price of 190 Rand. But as with everything in the market, you don't always, it's not an exact science. Things can go wrong, and even a high probability setup like this, and I really do believe this was a high probability trade, they can go wrong, and that's why we have stop losses in place, and that's why we manage our position size and manage our risk and so on.
I'm sure, though, given the fact that it was a high probability trade for you, it must have been quite tempting to almost just ride this one out, not apply your stop loss, given that all sort of the signs were pointing, and presumably once the sellers have been flushed out, still points to an upward trend for Imperial.
It might well do. It might well recover and carry on and move up like I thought it would. But, you know, I had a particular reason for putting this trade on it. We were trading a particular formation here, and we had a particular strategy in place. We had a stop loss at 173 Rand, and that was breached. And as you say, was I tempted to hang on and ignore the stop loss? No. But I'm happy to say in my personal trading career, I've got to the point now where I don't argue with stop losses anymore. I used to do that, and it invariably used to catch me out, and I'd lose more money than I should have. So I've got to the stage now where stop losses are non-negotiable. If it hits a stop loss, that's it, get out. And you know, most of the time I've actually found that when my stop losses have been triggered and I've exited, the trade usually gets worse afterwards. Sometimes not, but probably 8 out of 10 times it actually gets worse afterwards, and you'd be very grateful for having the stop loss in place. So it didn't work. It's one of those things. Not every trade is going to work out. And quite honestly, I mean, I still think that this formation was great. The way I traded it was right. I think if you gave me the same setup 10 times, I'd trade it the same way all 10 times. But sometimes these things don't work out, and that's why we have stop losses. So, it's a loss to our portfolio, but it's certainly not a crippling loss. And that's the key with trading. When you lose, make sure you don't lose too much. That's what's happened here. It's fine. We'll move on. We'll find the next trade.
Okay, well, talking about, it's not a next trade, but it is a trade that has been with the portfolio for a while, and that's Naspers, which you actually re-entered a few weeks ago. Yeah. What are you doing at the moment there?
Yeah, we've got 2 trades open on Naspers at the moment. So we had an original trade on from early March where I went long at 409 Rand 66. And at that stage, we bought 300 CFDs for our portfolio. And what I did is I sold half of them out at 450 Rand and kept the other half. So we're still long of 150 CFDs from 409 Rand 66. We've then got another trade, which is from the bottom of the recent trading range, where I went long 500 CFDs at 437 Rand 50. Now, the way I see this chart playing out at the moment is that I think Naspers has been a strong stock this year, but now it's gone into one of these protracted sideways movements, which it does quite often if you look back in history. So the range now is sort of between 430 Rand and 475 Rand. So I'm long there from the bottom of that trading range. Still looking for a rally towards the top of the range, but what is worrying me a little bit is I think we might maybe be forming a bear flag pattern over here on Naspers. And if we start breaking out below 440 Rand, then that'll validate the bear flag pattern, and then I'm going to probably look to cut all of these trades if that happens. We'll see what happens, but for the time being, I think it's prudent to ratchet those stop losses up to about 440.
Is Naspers a share that you become emotionally attached to? Because one can, and one can sort of believe in a stock no matter what it's doing on the market. Certainly some of the platinum bulls out there consistently pile in no matter how cheap Impala becomes the next day. Yeah. I mean, do you have a similar sort of situation with Naspers, or are you quite detached?
No, look, I mean, as much as it's been a good stock for us this year and we've made good money out of it, you shouldn't get emotional about these things. Don't fall in love with the share because it can't love you back. So, if it starts looking like it's not going to work for us, I'll cut it. I've got no emotional attachment to this. And as a trader, you can't become emotionally attached to your shares. It's not a good idea. There's an advertising campaign out there at the moment, which many of the viewers have probably heard, where they talk about the powers of emotion and reason, and how emotion is normally not a good thing for your investments or your trading. So that's the case here. We don't get emotional about shares. We don't love them. They don't love us back. If it doesn't work, if it's not going to make us money, it's out of the portfolio. End of story.
Okay, well, that takes us on to the next share, which is Anglo American, which is a share that you want to highlight this week. Certainly, I think a lot of people are quite emotionally attached to Anglo American and certainly have been punting it for the last few months, despite the fact that it really has had a tumultuous ride. Why is it a stock that's in focus for you?
Yeah, in terms of that emotion, it is one of the stocks that I think South Africans have a love affair with, because it is
love-hate affair, possibly.
Yeah, but if you think about Anglos and Billiton and Sasol, these are the blue-eyed boys that come out of South Africa, and they've done wonderful things on the global stage. And I think South Africans do tend to have an emotional attachment towards these companies. But just like any share, the price goes up, the price goes down, and it moves around. And there's good times to own it, and there's not good times to own it. So we're not doing a new trade this week, but I'm just going to put Anglo American out there for interest's sake, because it is quite topical at the moment, and lots of people are saying the resources are very cheap. We've got Anglos trading on a forward PE of about 7.5 or 8 or something, which is historically very cheap, and surely it's a buy. But I mean, these things can sometimes get cheaper, so we're not going to be talking about that here. I want to really look at the technical setup on Anglo American and see how it's stacking up as things stand at the moment. So the graph of it is up on the screen at the moment. What I've got there is a big lateral support level that comes in at 255 Rand. And you can see that going all the way back to 2010, and it's actually there's a number of pivot points going back even to 2008 where 255 Rand has been a very significant level for Anglo American. So we need to keep an eye on that, given that it is testing this long-term support here. I want to also just zoom in on the last couple of months, or in fact all of 2012's trading action really, which is illustrated by the rectangle on the graph over there. If we actually blow that up, what you can see is that there we've got our lateral support at 255 Rand as illustrated, and then we've also got a big downtrend, really a downtrend that has capped the trading action of Anglo American for the whole of 2012 to date. It's been in a steady downward trend, falling from about 340 Rand at the beginning of the year down to the current levels of around about 255. Now, what I want to look at in the next week, and this is what I'll be watching and what viewers can watch, is just keep an eye on this 255 Rand area. Let's see what happens here. I'm not buying it yet. I don't think it's a good idea to be picking bottoms in the stock right now. But if we get a confirmed reversal up off 255 Rand, and ultimately if we get a break of that downtrend at 270 Rand, then that could certainly turn the picture for Anglo American somewhat more bullish. For now, I think you've still got to be careful. The stock is in a downtrend. There are still a lot of headwinds in terms of the global economy being weak and what have you. And remember, these resource stocks need a strong global economy to really get their prices moving up. So at the moment, I think the risks of buying Anglo American are still quite high, but it is certainly on my radar screen, something to watch for the week and maybe the couple of weeks ahead.
Garth, is it also the case that if Anglo drops below 255 Rand, the really weak sellers will be flushed out, and at that point it does kind of hit the bottom and starts to, I mean, is that a factor in shares bottoming out, that people capitulate at that point?
It often is. You often do see a capitulation type sell-off at the end of a downtrend, and that hasn't happened yet in Anglo. So what you might find is that we get a flush out below that 255 Rand level, possibly a high volume flush out, flushes out all the weak hands, and then maybe a retracement back above that level. We'll need to see. But the market does tend to have a habit of going towards areas where it will inflict the most pain, and that would involve this stock actually breaking below 255 Rand, because then I think that would trigger a whole lot of stop losses on this share and probably trigger a bit of panic selling, because it would take Anglos to probably a 2.5-year low if it were to do that. So you could very well see a bit of a capitulation sell-off if we were to break 255. But if we did that, if we broke down below 255 on a high volume and then traded back up above that level, then I might look to buy it. But I'll be careful. Something to remember is that where we've made our money this year on the show is we've been trading strong stocks.
Well, exactly. I mean, that's a point to raise, because, and you've said, don't pick weak stocks and weak sectors, and this is surely one of the weaker stocks in the weaker sector.
Exactly, and I'm well aware of that. That's why I'm not trading it yet. I'm going to just see. Also, if we do it, I'm probably going to do it with less risk than we would normally do. So, as I say, I'm not trading it this week. I'm not picking bottoms in it right now, but I put it here for interest's sake, because it is very topical at the moment, and I think it's something that the viewers hopefully will find useful. And
just got the last point on Anglo. Technically, you've set out factors that are interesting to watch. Fundamentally, it's holding in Amplats. Of course, they came out with the numbers yesterday, which were dreadful. Do you think that's all in the price of Anglo American, or if there is further pain for Amplats, will that reflect in the Anglo American share price?
I think a lot of that bad news probably is in the price now, but I'm not sure whether we're completely at the bottom yet. But I think most of the bad news must be factored in at this stage now,
Okay, so that's a share to watch, but not necessarily one to trade. How does the portfolio look given the disappointment with Imperial?
The portfolio is still looking strong. We're up at 342,000 Rand now, so it's up 37% for the year to date. It is down a little bit from our recent highs, but that's still a pretty good performance for the year to date. You can see the trades that the recent trades that we've had on the portfolio. There's the Imperial with a loss of 8,500 Rand. Naspers, we are still making a mark-to-market profit there, and a couple of other trades, Goldfields, Woolies, New Gold, which we've closed out over the last few weeks. And then we've got that original trade in Naspers, where we're still running a mark-to-market profit there as well. So effectively, the only thing we've really got open in our portfolio at the moment is actually a bit of a position in Naspers. And I'm watching that like a hawk, because that 440 Rand level does worry me a little bit. So I'll be keeping a close eye on that for the week ahead. But other than that, we're actually very light in the market at the moment, which I think is not a bad place to be, given that it is such a skittish environment right now.
And just to end off with, a reminder of what courses may be coming up next?
I've got another course in Joburg on the 18th of August. There's still space available for anyone that wants to attend that. So any viewers that are interested, they can email me on garth@traderscorner.co.za, and I'll send them the information. And I'm also on Twitter and also on Facebook, so you can get hold of me via any one of those three mediums if you're interested.
Hopefully, and I'm sure they will be. Garth, we have to leave it there. Thanks as always for joining us.
Thanks.
That's Garth McKenzie, the founder and editor of Traders Corner.